Alright, what's going on everybody on YouTube? Griffin here coming back to you guys with another live stream, late stream this evening from the Millennial Motivation Entrepreneur YouTube channel. First and foremost, if you're tuning in for the first time, we'd love to have you here for our future streams. Definitely consider hitting the subscribe button below and hit the bell icon right beside it. That way you'll be notified every time we go live or upload another video. I'm going to try to keep this one somewhat short tonight because it is late evening already. Had some things going on this evening and laptop is still charging as we speak. So just going to try to stay on topic and just to the point and everything. Before we get going, I just want to make sure that we are up and the stream quality is doing all right. Looks like we're all good to go. So, and then also before I dive into just today's video, if you're not already in our Discord group chat, link for that is down in the description below. We have over 170 of you guys in there now, and it's just awesome to see that community continue to grow. What I would suggest doing is downloading it on your phone or laptop or something first, creating a profile, and then hit the link down below, because then that way it'll take you right to our group. No questions or anything like that, if I remember right, just super easy to join. And yeah, it's just awesome to see this community continue to grow. So we'll just hop right in. I know a lot of you guys like keeping up just kind of like with my progress with the portfolio and whatnot. Obviously, we've been trading on TD Ameritrade Thinkorswim. Specifically, we were using Tastyworks before, but now we're using TD Ameritrade Thinkorswim for everything. And it's been almost 6 weeks roughly now since we've started using them. We started out with a $1,500 portfolio, and at the moment we are currently up to $1,838 roughly, subject to change because this SQQQ position is not updated. It's not like a 24-hour change of ETF, unlike TQQQ, which is actually now up apparently slightly since we've opened it. And that's kind of what we're going to be talking about today, is just hedging, how I go about hedging my positions, what thought process, like what goes into my thought process when it comes to hedging a position. You guys know for about the last week now, I've been short on the market overall. I've been in some SQQQ, just a decent little size position, about $600 to $700 position now within SQQQ, and I actually bought some more of it, I believe yesterday, actually on Monday. Forget what day of the week it is. We bought like 10 more shares on Monday whenever the market continued to go up. Just 10 shares, nothing crazy, another $100 to $120, something like that we added into that position. So that brought our overall position up to, like I said, just over like $600 to $650. And then today we averaged into some TQQQ. As you can see, just buying a couple shares here and there. Again, just hedging that SQQQ position more than anything. And since we're always bullish on the market long term, we like to buy it on down days, of course. And we had a pretty decent down day today. So as you can see, we started out buying a couple shares at 73 bucks. Bought one more around 71, and then we bought two more shares right before the close, where TD Ameritrade won't fill your orders anymore, just before 7 p.m., literally 8 seconds before 7 p.m. Central U.S. time at pretty much 70 bucks, which brings our total average cost somewhere, I think is like 71.40 is our average price per share at the moment. And again, that's just to hedge the SQQQ position in case if we like get some push up overnight, we'll make some profit on TQQQ. Again, it's all about trying to make continuous profit and whatnot, even whenever we have a trade that may be a short-term loser, so to speak. But as you can see, overall, wasn't a bad day for sure. We made $56 back on SQQQ. That position was down roughly like 50 to 55 bucks. Hence, now it's up about $3, and that was as of, again, 7 p.m. U.S. Central Time. We'll see how it opens up overall, which takes us back to the charts. You can see the Nasdaq is down. It's almost back to break even, actually. We were down about 0.75% at one point. Not surprised at all to see kind of a little relief rally, as we like to call it. The hourly chart was starting to show pretty oversold conditions, at least in the short term. We actually broke that lower Bollinger Band. If we zoom in here, okay, so we broke below that Bollinger Band. We came back above it briefly, wrote it down. That was when we were down about 0.75% after hours, and then you can see, of course, we're starting to ride back up. We're pulling up close to our 8 EMA here on the 1 hour chart, and then after that, of course, we have the 20 SMA, which is kind of your median for your Bollinger Bands. So I wouldn't be surprised to see these bands kind of compress overnight tonight just a little bit if we don't get rejected at the 8 EMA. Assuming that we don't and that we end up kind of going through it, we might struggle a little bit, but I'm assuming we'll probably go through it and we'll probably retest 91 to 91.25 on the Nasdaq specifically, since that's what TQQQ and SQQQ trade based off of course. TQQQ just moves 3x whatever the Nasdaq does. SQQQ is going to move 3x to the opposite side of whatever the Nasdaq does. So hoping, in all honesty, that we continue to roll over tomorrow. Very high possibility of that. When we pull up like our 4 hour chart, more of a longer term spectrum, you can see overall we've obviously just been chugging right along. Last week, essentially, we've had nothing but green days. I think it was 6 days in a row now. The Nasdaq was up, so it was definitely due for a breather. We are right along that 4 hour Bollinger Band. You can see here, though, that they are starting to show signs of becoming further apart, which usually shows a sign of increased volatility, of course, which usually means whichever side you are at the moment. A lot of times you're going to either break up to that side or break down to the downside. So we'll see how it plays out overnight, but I'm still expecting us to kind of pull back. The more that I look at it, the more I'm starting to think that we'll probably pull back to somewhere around the 8,800 range. Early on, I think it was yesterday and even over the weekend when I was looking at the charts, I was thinking maybe 8,900 to 9,000. But with the pretty big drop that we had today and just how everything's kind of looking overall, I wouldn't be surprised now if we do. We may not hit 8,800, but I think we can definitely see somewhere around 8,850 for sure. It's definitely not a far stretch or anything. You're only talking about roughly 200 points from where we're at right now. So that'll be kind of interesting to see how it plays out overall, which leads into our discussion about hedging. So as I mentioned a little bit ago, we are still holding the SQQQ position. Obviously, we weren't really looking to cover profit of about $3. We were up $4 at one point, but not really necessarily interested in covering that. It was only up, even when it was up like $4. That was roughly about a 0.7, close to about 0.75% move. Now, obviously, you guys know that I'm all for covering profits and whatnot, but when I was looking at kind of the risk that I took on with that position and all that, and then when I'm looking at the current Nasdaq positioning, I was like, you know what, I'm not going to cover here. If we continue to go down tomorrow, I may downsize this position, go ahead and take like half of my shares off, leave like 25 to 30 shares remaining, which would be about a $300 position remaining in case if we keep moving. But just in case it does decide to reverse overnight and we go up, that's why we bought in a little bit. Like we said, 5 shares around $71.45 of TQQQ, which is apparently now up $1, which, again, nothing like crazy. This SQQQ, keep in mind, is not updating because, again, it's not a 24-hour moving ETF like TQQQ is, because TQQQ, of course, moves 3x whatever QQQ, all them Q's get me mixed up, it moves 3x whatever QQQ moves. So since QQQ is a 24-hour traded ETF, TQQQ will update as well along with that. So something to kind of keep in mind there. Don't take into consideration the profit loss at all so far, because tomorrow is really what's going to matter the most. But so what went into my thought process whenever I went ahead and started buying some TQQQ was one, we had a pretty decent drop today overall. Again, when we go back and look at the 1 hour chart, which is the chart that I always tend to start with for swing trades, I could see that we had started approaching oversold conditions on our RSI, which is not necessarily like a 100% indicator or anything, but a lot of times whenever we bounce around that oversold condition on the 1 hour and get somewhat close to it on the 4 hour chart, you're definitely going to look at some sort of a decent bounce, usually somewhere around 1% minimum in most cases. And then also, like I said, we know long term the market's going to go up anyways, even when it has no reason to, like it's been lately. Obviously, there's been, I don't even have to list off everything why the market shouldn't be going up, but again, it's going up practically on hopes and dreams at this current moment, which is why we're mostly short. However, when you look at my math for my positions, you can see here, just do the simple math, 5 times roughly $71. We'll just do the math and not even guess, times 71.45 is a $357 position compared to our SQQQ position, which is pretty much a 600 and actually 675. I guess I'm factoring in when it was down, it was like 650. So a $675 position. So almost 50% less is the TQQQ position than the SQQQ position is for my portfolio. So what goes into that thought process is again, since I'm assuming that the market throughout this week, or at least maybe not even by Friday, but over the next few days, I'm expecting the market to continue to drop. I'm leaning more towards that we're going to keep dropping at least for a little bit versus going up. So, of course, I'm going to have more of my chips, so to speak, in the SQQQ versus TQQQ. And the reason that I wanted to make it somewhat close to about 50%, like my TQQQ position being 50% of SQQQ, is like, you know what, if for some reason the market decides to go up, even though like this position, for example, let's say it's down $10 or $20, this position would be up $5 or $10. So I'm at least making, again, just making some sort of profit. I'm not looking to like smack a home run with my hedge or anything like that, but I'm looking to, again, just have some sort of continuous profit. That way, if the best case scenario plays out where we continue to go down, then like I said, I'll take that position off the table. We talked about this a little bit in the Sunday stock watch that we do every Sunday evening. I was mentioning that what I'll do is, which is exactly what I did, buy a little bit of TQQQQ, and then assuming that the market goes down another 1 to 2%, which is what I'm expecting, that would give me about a 5 to 6% return on the SQQQ. I would take all the profit and the money that I had in that position and start slowly buying some more TQQQ. So many Qs. Buy some more of that, and then just slowly buy some, and then eventually most of my portfolio will be TQQQQ, and then as it starts to go up, we'll kind of do the reverse. Essentially, once I think the market's showing signs of overbought again, we'll slowly take some of the position off, and then we'll start putting a little bit in SQQQ, and then just rinse, repeat, just over and over. That's pretty much what we do on a weekly basis. A lot of times it doesn't play out like day to day, literally to a T. A lot of times I'm holding just one or the other because I want to be able to have as much shares of whatever I'm riding up, down in the case of SQQQ. But whichever one is on the upswing, I want to have most of my chips in there. And then again, like I said, when I think it's either overbought or oversold, take the position, start to downsize it. Like I said, if we start going down even more tomorrow, probably take half of this position off, start rolling some of it into TQQQQ. And by the way, I mean, keep in mind, I still have another $800 that I can put to work. So that's the thing too. When you have cash on hand, you have options. I could, if we continue to go up tomorrow, I'll still have the TQQQQ. So I could hold it if I wanted to and maybe buy some more SQQQQ at a cheaper price, average down a little bit on that position, and then maybe buy, say, another 5 shares of TQQQ to kind of hedge it out a little bit more. And then there's so many ways you can do this at the end of the day, but my thought process, just in short, is simply that I want to have whatever position. When you're talking about leveraged ETFs, no matter if you're doing U down S down or SPXL and SPXS, or what I do the most, which is the T and the SQQQ, whichever one that I'm leaning more towards heavy on, I want a position that's about 50 to 60% of the size of the one that I'm kind of overweight in, so to speak. And that's just, again, like I said, it's not that like I'm worried that the trade's not going to pan out or anything like that. It's just, I mean, none of us are ever going to be like 100% right. Boom, this trade's going to work. Boom, this trade's going to work every single just day by day by day. So I want to have some more consistent money, some more cash flow rolling into the portfolio. So either way, if I'm wrong short term, I'll still collect a little bit of money on the hedge. And if I'm right in the short term, as I hope to be, of course, then I'll make even more money on my position that I'm expecting to make the most money, and then just take that money and roll it into the next setup within whatever the opposite is. In this case, the TQQQ. So I'm trying not to make it too complicated. I know it can get complicated, but again, just in short, whatever you're in, it's not a bad idea to have another position that goes inverse of it, of about like 50 to 60%. Or if you're somebody that's like, you think you're right all the time or something, then, I mean, even if you just do a small position like 25 to 33%, like a quarter to a third of your original position, just something to kind of hedge, I definitely suggest doing that. And before we keep going, I want to make sure our stream quality is doing okay for you guys too. So we got a couple of you tuning in, and if you guys have any questions or anything, definitely just shout it out in the chat, because like I said, I know it can kind of get complicated. I hope I'm not making it complicated or anything like that. It's pretty simple overall. It's all about ratios at the end of the day. So like in my position, for example, you'd pretty much call it like a 2-to-1 ratio, meaning for every $2 I have in SQQQ, I'm going to have $1 of TQQQ. And it's not ever going to be exact, but you're going to have a pretty much rough estimate. Like we said, this one is pretty damn close to a 50% position, so that'd be a 2-to-1 ratio essentially. Again, meaning every $2 I put into SQQQ, I'm putting $1 into the T side. And yeah, I mean, that's the beauty of trading like inverse ETFs versus simply just buying stock. Now, the one thing you could do when it comes to like buying stock is, instead of like literally buying stock, you could do, say, buy a couple of put contracts if you're into options. Like, say you're assuming X stock is, like, let's just take a look at an example here. Let's say you're trading Apple or even SPY, because I know SPY is what a lot of us trade when it comes to options. Pretty sideways action at the moment. Let's say right now, for some reason, you were kind of long SPY. So what you would do here hypothetically is, if you're putting it into like options terms or buying stock and whatnot terms, is say you wanted to buy stock, which I would not suggest on SPY. I'd probably buy like SPXL, which goes into inverse ETFs. But let's just say for some reason you wanted to buy some SPY. You could buy, say, 10 shares. We'll just keep it easy numbers. 10 shares times $286, or $285 is what's trading at right now. That'd be a $2,850 position. So another thing you could do to hedge that position is sell a couple of vertical call spreads, where you're saying, okay, like I'm long on SPY, but in case if it continues to go down, I'm going to have some protection through options, where as long as SPY stays below, let's say you did it at 300, you would collect money on that. So even if, say, you go down a little bit, say we drop down to like 278 or something in the short term. You're down $7 times 10. You're down $70 on that position, but you have a couple vertical call spreads. Say the credit is a max of 82 cents, which would be $82 or something per position. And let's say you hedged yourself with like 5 of those and you collect 50%. You're looking at somewhere around like $40 times 5. That's a $200 profit that you had. So your profit from that vertical call spread, hypothetically, if the trade played out like that, you would still make money on that trade and you'd still be in the green after that specific trade. So there's a lot of ways you can really hedge your portfolio at the end of the day. There's so many creative ways. For newer traders, though, I definitely suggest starting out with like the inverse ETFs, which again, for those of you that don't know a lot of those, you have UDOW, which moves 3x whatever the Dow Jones moves. SDOW is its inverse, meaning whatever the market moves, this is going to move the opposite. And then you have SPXL, which moves 3x whatever the S&P moves. SPXS, if I can type. Come on, keyboard. Lagging on me a little bit. Come on. SPSX, which moves 3 times the opposite. And then, of course, the ones that we talk about the most here is TQQQ, which moves 3x of the Nasdaq. And then, of course, SQQQ, which moves 3x in the opposite direction. I definitely suggest newer traders, new investors that are like looking to hedge a portfolio or hedge a retirement account or something like that. I definitely suggest the leverage ETFs because it's much easier. There's a lot less thinking involved. The thinking that goes into like the leverage ETFs is just simply ratios. Like I said, 2 to 1, 3 to 1. I wouldn't get no higher than 4 to 1 personally, unless if you're just like super bullish or super bearish. And usually more times than not, hint, it pays to be super bullish over super bearish in most cases. Just a future hint for that. But take what you pay for when it comes to that advice. But usually I like to hang around a 2 to 1 to 3 to 1 ratio when it comes to hedging these positions. And like I said, it's just a lot less thinking goes involved versus like we were talking about a little bit ago. When you start integrating options in, it can get complicated pretty quickly. But at the end of the day, it just comes down to dollars. It doesn't matter about like shares or anything like that. It just comes down to dollars and then break it down into a fractional ratio, essentially. So other than that, though, that is pretty much it. Like I said, we're going to try to keep the video pretty short and sweet and to the point. I know we've only been live now for a little over 20 minutes. Our average streams are close to like an hour in most cases, but just wanted to keep this one kind of short and sweet and to the point. And like I said, just give you guys kind of overall update on the portfolio as well. Again, had a pretty decent day today. Good little bounce back. We're back over $1,800 on the account, which puts us up now about almost around $340 in the last 6 weeks, which from a let's do the exact, let's just call it 340. $340 divided by, we started out with 1,500. That is a 22.66%, so 22 2/3% return on the portfolio in less than 6 weeks. We'll just call it 5.5 weeks. So yeah, we're still averaging about 4% a week right now. Can't complain about that at all. You guys know my goal is just simply 1% a week. I'm fine with that for sure. Last week was kind of a rough week, specifically because of SQQQ. We did have 1 or 2 day trades. As you can see, we only have 2 available right now. We were using TQQQ again as a hedge and kind of just playing a little here and there, and that kind of helped minimize the bad luck we were having early on with SQQQ. I mean, as you can see, like I said, we were up almost $60, but we're only up $3 on the position at the moment. So that position, needless to say, was not going in our favor early on, but it looks to be turning around. My target sell originally was $12.25. Honestly, now I am looking more at, what was I thinking, like $11.50. We got it pulled up here. So we're right at the resistance level. We were talking about this Sunday. We're going to have a little bit of resistance right around this 1125 level. It looks like we ended above it, which is encouraging. I don't know if we did actually end above it though. Yeah, we did end above it, so that's a good thing. And I think if I remember right, my target now is, yeah, it's just under 12 bucks, like 11.75. So if I can get 11.75 out of this, I will sell it all. So let's say, what would that be for my profit? My profit would be, we'll just call it 50 cents per share. 60 shares times 50 cents is going to be about a $30 profit, divided by an initial investment of, what was it, like 672, is 4.4%. So again, that's why you can see over the last 5 weeks now we've been doing right on about what we're going to plan on doing on this trade. Is right around 4% is what our average pretty much has been, trade over trade. We've had a couple that are like 10%, 12%. Then we've had a couple that are only like 0.5% to 1%. So it all equals out at the end of the day. But like I said, if I can do 1% a week on average every single week, I will be ecstatic with that. So hopefully you guys did enjoy the stream. If you did, definitely make sure to smash the thumbs up button. I greatly appreciate that. And like I said, if you're new to the channel, hit the subscribe button below. We'd love to have you here for future videos. And check out our Discord group chat. That link is down in the description below. And of course, it's totally free to join. We now have over 170 of you in there. It's awesome to see that continue to grow day by day. But until next time, guys, keep on going out there, making your profits, covering your profits, and achieving your financial freedom this year. And I will see you guys in the next stream here in a couple days. But until then,